Hey everyone, quick video on silver and gold, or silver or gold, however you want to look at it. Silver and gold are getting a lot of attention right now because of steady price gains. So if you're wondering which one is for you, there are a number of things to think about before you jump in. We're going to get into it. So let's start with silver. Since it's the one that's making the sudden move, silver spot price is bouncing around the $23 mark, and a lot of people think it has the potential to go a lot higher. But with high premiums on physical silver, a lot of existing silver owners are pulling back from buying. They're following the golden rule. Buy when nobody loves something, sell when everybody does. So in other words, you want to buy low, sell high, right? Now, everyone has their perspective when they're stacking precious metals. I think it's a little more nuanced than the reasons that you'd own non-physical investments, we'll say. And silver can seem a lot more like security than investment. So regardless of whether people plan to sell at the height of demand, like you'd want to according to the golden rule, a lot of us have had plenty of time to buy silver below $20. So there's already kind of an upswing that we have to look forward to. So it's been below $20 for a decade. I don't know if you want to say it stayed there or it stagnated there. It's kind of a sideways trader, and 10 years isn't fair. It's probably more like 8 or 9, but really it hasn't done anything. All of a sudden it is. Now the problem with silver and its rise is that it's primarily an industrial metal at this point. What that means is only 20% of silver demand comes from investors. So the industrial growth it serves is best served by lower silver prices, right? Meaning this stuff is more valuable if prices are low. So all the talk about the things that it can do, its necessity in semiconductors and batteries and solar panels or solar cells and electric vehicles, all that demand requires lower priced silver, not investor grade silver with price shooting to the moon. So there's a lot of downward pressure. Now, so what does that mean? Okay, so downward pressure, just for a second. I think the best way I can put that is that silver is more valuable if prices are low, if that makes sense. Now, the upside of silver is that because it has higher volatility, meaning it trades up harder, it trades down harder, it's more likely to return short-term gains than gold is. And to a certain extent, we can all watch gold and then bet on silver making a similar move at a later date in a more condensed period of time. It's kind of like you like to think that you've got that little bit of a tracer bullet, tracer round with gold. Now, it's not always that way. We can look back not too long when silver dropped, right as the pandemic started pushing into a financial crisis. It traded down, but it's fun to speculate on. Now, gold, on the other hand, most of gold's demand comes from investors. And because of that, it's more valuable as spot price goes up, as you'd expect. So if you're new to precious metals, though, you need to remember that the price of gold goes up when there are times of economic uncertainty. And we're, of course, seeing that right now. So if you're buying gold because you think it's always going to perform the way it is right now, you're kind of betting that things aren't going to get any better. And, some people think that way. No, I don't. I think things are going to get better. I think that that's going to change the market dynamic for gold. It's going to affect its price. But, there are a lot of people far better financial minds than mine, and some of them are suggesting that governments, including the United States, may be inclined to start buying gold as a tangible asset. So they would do that basically for the same reasons that central banks do. So you need to hold assets. So if that happens, gold will continue to go higher. And even if it doesn't, it's far more likely to play the role of a safe haven asset than silver is because gold is a tier 1 asset. It's a little more predictable than silver. So back to silver just for a moment. It wasn't that long ago. I just alluded to this, that silver, it really has shot off in the wrong direction. It's kind of like a bottle rocket without the stick. You know, who knows where it's going to go? It shot down to $14 right when everybody thought that it was going to shoot up. So again, that can be lots of fun, but you can also get burned. You can shoot yourself in the eye. So if you're new to precious metals, just know that you're coming in at a very strange time. You could be seeing it trade well above the resting rate right now, meaning you could be on highs that are going to reset shortly after the crisis. But I do think it's safe to say there's going to be a lot going on in the next few months, up to a year. So if you're careful, it could be a lot of fun. Just make sure you do your research. Don't just listen to some guy on the internet talking about metals. You know, go out and do a little bit more research. I am absolutely not a financial advisor. I can look back 10 years and see what happened in 2011. And you should too. I had a video prior to this where I showed that chart briefly. Prices went up, they came back down. So sometimes history repeats itself. It's a good lesson to consider. Now, if you enjoyed this video, or even if it just got you thinking, do me a favor and hit that like button. And if you hated it, you know what? You can go ahead and push the other button too. I don't mind. I always appreciate you watching. I try to reply to any comments. So if you'd like to see more, you want to kind of get more involved, please hit the subscribe button. I appreciate it. Again, I try to reply to any comments, and I always appreciate you watching. Thank you for watching this one. Hope you come back. Thanks, everyone.